Good morning, good morning, good morning. Welcome to today's morning blast. It is Thursday, the 19th of June, all day. You join myself and the magnificent Mr. Michael Brown for the morning blast, where we jumpstart your trading day with a market preview, review, add a bit of value, put a smile on your face, etc., etc. But before we kick off, I will get the legals out the way. As usual, nothing discussed on this Spaces session constitute trading or investment advice or infers any kind of endorsement by PIQ, myself, Ryan Paisley, or indeed Mr. Michael Brown. Hello, Mr. Michael Brown. How are you?
Well, very good morning to you, Ryan. Good morning, everyone. I'm slightly annoyed, actually. Someone's stolen the meeting room that I was about to walk into. So
No,
do forgive me.
no.
Indeed, do forgive me while I hike around the office to
Well, I
find
tell you what,
an appropriate chair.
whilst you do that, shall I read out the Iranian headlines from Zach's overnight news roundup?
That is a very good idea.
There you go. So, as usual, well, I'll say as usual, as we've started doing, we read out the Iranian headlines first because pretty much a lot of what we're talking about refers to this. But today, probably more than most days, by the time you're listening to this, if you are listening to this on the playback, there's probably a load more to factor in. But we will go with what we know so far. So the US is preparing for a possible Iranian strike. Bloomberg reports the US is eyeing this weekend for a potential attack on Iran, with preparations underway for a possible strike in coming days, signaling heightened tensions. Trump approves the Iran attack plan, awaits nuclear move. The Wall Street Journal says that Trump told aides Tuesday he's approved attack plans on Iran, but is holding off to see if Tehran abandons its nuclear program. Apparently, Trump is eyeing strikes on Iran's Fordo facility. ABC News sources indicate Trump is warming to the idea of multiple strikes on Iran's Fordo nuclear facility, with movements underway to prepare for this action. European ministers, they're to hold nuclear talks with Iran. Bloomberg are reporting foreign ministers from the UK, France and Germany will meet their Iranian counterparts in Geneva on Friday to discuss Iran's nuclear program. And Shell, the oil giant, warns of the Strait of Hormuz risk. Shell says contingency plans for potential disruptions in oil flows from Israel-Iran conflict, warning that the Strait of Hormuz blockage could cause a major supply shock per Bloomberg. But as the current thinking is still that blocking of the Strait of Hormuz is still a way off and not something that's likely. One thing I will add that didn't make it into I didn't see it in the overnight news roundup, was that there's been a significant escalation, which is obviously the Iranian missile that hit an Israeli hospital, one of the largest Israeli hospitals in Israel. This is seen as a massive escalation because obviously it's targeting civilians, etc., etc. And we've already seen chatter from Netanyahu and senior Israeli policymakers and politicians saying that basically Iran are fucked because of it. That's a bit of a technical term for you there, but that's it on the Iranian stuff from me. Back to you, mate, if you found a desk and a chair. Oh, where's he gone? He's dropped off. Let me just add him back. Dum dum dum. Invite to co-host. We lost him. I hope he's coming back. Dun dun dun. Is he there? Hello.
I am here. Can you hear me?
I can now. I don't know what happened
Oh,
there.
good.
You
No,
dropped off.
no, no. I think I somehow lost connection. Either the Wi-Fi dropped out, or it was when Mr. Richard Bernard was joshing with me about being in the office today.
Yeah. Let's blame Mr. Rich Bernard.
Exactly. That's always a safe bet, isn't it? Well, that was a very comprehensive roundup nonetheless, but
Thank you.
moving away,
I say thank you. It's all down to
I,
Zach. So thank you,
I
Zach.
was going to say, yeah, let's give Zach some credit, shall we? In terms of other developments yesterday away from geopolitics, of course, we have had a busy 24 hours or so of monetary policy decisions, highlighted naturally by the latest FOMC policy announcement last night. Unsurprisingly, the target range for the Fed funds rate maintained between 4.25% and 4.5% in what was a unanimous vote among committee members. The policy statement was also pretty much unchanged from that which was issued last time out, with growth continuing to be described as a solid pace and the labour market still described as solid. There was a little bit of housekeeping around the commentary on the dual mandate. the Fed noting that they are now attentive to risks to both sides of that mandate, and having removed the line that they are that the risks around higher unemployment and higher inflation have risen. Importantly, my interpretation of this is, and I'm happy to be corrected, is that this is not the Fed saying those risks have gone away. It's simply saying that they've just stabilized at a very, very high level. So I think a few folk have probably read a little bit too much into that relatively minor grammatical change from Powell and Co. last night. Of course, we did have the quarterly summary of economic projections out from the FOMC as well. Not going to go through all the numbers
Thank
in
God for that.
detail, but well, exactly. The nub of the projections is that the Fed are forecasting a slower pace of economic growth in the short term, with GDP now expected to grow by just 1.4% this year, down from the 1.7% foreseen in March, and that the FOMC are also projecting a higher inflation profile in the short term as well, with both headline and core PCE inflation seen at just north of 3% this year, before getting back towards the 2% target towards the end of the forecast horizon. Again, no real surprises there. The natural effect of tariffs is going to be a growth headwind and price pressures over the short term, and then that should fade as the economy adjusts to those measures. Of course, we also got the latest dot plot accompanying those economic forecasts. The dots were actually quite interesting because while the median expectation for the Fed funds rate this year continues to point to 50 basis points worth of cuts, unchanged from the March projection, there are now 7 FOMC members who envisage no cuts at all between now and the end of the year. So although we still see the median dot holding steady, the dispersion around those dots has
Oh, good word.
increased massively, which is really just a reflection of the huge degree of uncertainty which continues to cloud the economic outlook. Further out, the Fed now penciling in just 125 basis point cut next year and 125 basis point cut in 2027. But as expected, Chair Powell really downplaying the importance of those dots at the post-meeting press conference, noting that they are not a plan or a decision, and also that no one has a particularly high degree of conviction around those dots.
Of
In
course not.
fact, I would imagine that given the choice, most of the FOMC would probably not have wanted to even make a dot plot this time around, which, interestingly, I was talking about this with our good friend Brent, who is as Black Lion on Twitter. We were saying last night, wouldn't be at all surprised if as part of this strategy and framework review that the FOMC are doing, they actually turn around and end up ditching the dot plot sooner rather than later, because effectively what happens every time is they issue it and then Powell spends an hour saying, don't pay any attention to what we just issued, which does rather defeat the object of putting the
Well,
dot
this
plot
is
out
it,
there in the
and
first place.
it's something that we keep saying every time that dots come out, and we tweet it, we talk about it on the show. Is this isn't kind of what they're planning to do? This is just a snapshot of the day that they decide to do the dot plot, what they're
Hmm.
kind of envisaging. But obviously, all bets are off as soon as we get data or whatever comes on that moves that dot plot. They do move. They're not door numbers.
No, absolutely not. The remainder of the press conference very much in line with expectations as well. Powell sticking firmly to his now familiar script, noting that monetary policy is in a good place and that their policy stance is well positioned to wait for further clarity on the economic outlook before delivering further rate cuts. Although Powell did, of course, reiterate that the direction of travel for rates does continue to lead to the downside. In terms of other policy decisions, just to round those out, we did hear from the Riksbank in Sweden yesterday. They delivered a 25 basis point cut as expected, lowering the policy rate to 2%, while noting that there is, quote, some probability of another rate cut this year. That comes as they revised their inflation forecast down to 1.7% over the next 12 months. For a prior 1.9%. And as we came to air, and I was struggling with various technical difficulties, the Swiss National Bank announced their latest policy decision, delivering a 25 basis point cut, lowering rates to 0%. They also reiterated that they are prepared to intervene in currency markets if needed. There was some speculation that the SNB would go with a larger 50 basis point cut, but they clearly did not go down that path. In terms of other other notable catalyst from yesterday, well, it's worth bearing in mind that it was an absolutely dead day in terms of market moves. Certainly, if you look at the closing P&L, the S&P and Nasdaq closing pretty much flat, the FX market pretty much flat, and gold hovering around $3,400 an ounce. Although, of course, we have seen a little bit of downside in equity futures and a little bit of upside in crude as the new trading day has got underway. In terms of catalyst from yesterday, as I said, we did have some US data, both housing starts and building permits coming in marginally below expectations. Meanwhile, jobless claims were pretty much bang in line, with initial claims rising 245,000 in the week to the 14th of June, continuing claims at 1.945 million. That was bang in line with expectations. And of course, do bear in mind that the initial claims print, that does pertain to the June non-farm payrolls survey week. As for other notable headlines from yesterday on the trade front, Treasury Secretary Scott Bessent noted that he is likely to meet with China in about 3 weeks' time. Apparently, this meeting was agreed as part of the trade talks that they held in London last week, and is part of their efforts to continue with what the Treasury Secretary calls a mutual rebalancing, which should be a natural process in his mind. As for other news flow from yesterday, the incredibly long-running saga of the US Steel, Nippon Steel merger, that has finally closed. Nippon Steel have finally bought US Steel. I say long-running. This has been going on since December of 2023. I didn't realize it had been going on that long. Of course, you'll recall that the deal was initially blocked by the Biden administration on national security grounds, which was just complete nonsense. It was
Yeah.
Biden playing politics. Trump then said he would also block the deal, but now has given it the green light after Nippon Steel entered a national security agreement with the US government, and as US Steel are apparently going to issue a golden share to the US government as well. So, of course, we'll see how that one pans out. Apparently, it is going to result in according to the press release, $11 billion of new investment in US steel making by 2028. We'll see whether or not that happens.
Just on that, so because one of my headlines I've got to read is actually on this. So Bloomberg are reporting that Nippon Steel are eyeing a capital raise to fund the deal. It's considering Nippon Steel is considering capital increase to fund its $14.1 billion acquisition of US Steel and related investments. So interesting to see how they decide to raise that money.
Yes, that will be certainly one to keep an eye on. In terms of other corporate news, we had news out of the EU yesterday, Reuters citing sources. The European Union are apparently going to be probing Mars's acquisition of Kellanova. Again, this Kellanova, probably, I'm going to have a rant here.
Go on.
Awful rebrand.
Get
Awful
comfy.
rebrand. They're the company that every man and his dog knows as Kellogg's. They make cornflakes.
Do you know what I was about to say? Who the fuck are these people? I've never heard of
And
them.
they brought in a hell of a load of management consultants and paid them God knows how much money and renamed it as Kellanova instead. I mean, if I was a shareholder in that business, I would be fuming at that. Anyway, moving on from that.
So it's now Kellanova cornflakes.
Yes, I believe so.
What a load of crap.
I know, mental. Other corporate news
I'll stick to me Cocoa Pops.
Well, they might be Mars Cocoa Pops. Deary me. Other corporate news from yesterday, we had reports via Bloomberg citing sources that Microsoft are apparently planning thousands more job cuts, this time looking to trim a whole host of salespeople. And last but by no means least, in the United States, good news. The US is apparently planning to drop guidance which limits alcohol to 1 or 2 drinks per day. This is Reuters citing 3 sources familiar with the matter. Instead, the Department of Health in the United States will be encouraging Americans to, quote, drink in moderation.
Yeah.
I think I can speak for both of us when I can assure you that drinking in moderation never goes entirely to plan.
Wow, yeah, I disagree. I think it just depends on your definition of moderation.
Yeah, very true, actually. But are you still there, Ryan? Because that's all
Yes,
from me.
okay, awesome. So just a few headlines that we haven't already covered from the always awesome overnight news roundup, courtesy of the wonderful Zach Eisman. If you don't already follow Zach, give him a follow. Also, make sure you subscribe to the Substack that we put out to keep you updated. So I've read out the Iranian headlines to get some trade headlines for you. So Trump's tariffs to raise US car prices. Consultant Alex Partners estimates Trump's tariffs will add nearly $2,000 to US vehicle prices, with car buyers facing a $30 billion cost burden, according to Bloomberg. Stigma trade, Swiss exports to the US plummet. Bloomberg reports Swiss exports to the US dropped 42% in May, narrowing Switzerland's trade surplus to a 5-year low, while US imports rose 6.5%. In
Is
macro, gone.
Sorry, I was just going to say on that Swiss data. I know that's May data, but it does feel like there's still a bit of a hangover effect from some of the front running and the impact of
Oh,
tariffs and all the rest of
absolutely.
it skewing that.
Yeah, no, yeah, definitely. I think it's going to take a couple of months before that's all kind of washed out, and we can get some actual, like, solid data on that front. In macro news, foreign investors hold near record US Treasuries. Tick flow data shows foreign investors, US Treasury holdings neared a record high in April, despite market turmoil from Trump's tariff plans. That's per Bloomberg. We've got stable coins may boost treasury demand. Wall Street Journal notes Wall Street analysts see stablecoin growth driving demand for ultra short-term US treasuries through the impact scales remain uncertain. Obviously, that's where these stablecoin companies will be holding treasuries as part of their kind of collateral. Japan's cuts super long bond sales. Reuters reports that the Japan's government plans a rare 10% cut in super long bond sales this fiscal year, trimming overall bond issuance. Sticking over in the APAC area, South Korea unveils the extra budget. Bloomberg says South Korea's announced a multi-billion-dollar extra budget to bolster its economy amidst sluggish consumption and Trump's tariff pressures. Vietnamese dong hits record low. Everyone loves a low dong. The
Oh God.
Vietnamese dong fell below its April low, pressured by Asian currency declines after reports of possible US strike on Iran, per Bloomberg. Platinum that surged to a decade high. Bloomberg reports platinum hit its highest level in over a decade, driven by spiking demand and expectations of market deficit. Geopolitical news, just one headline on that. Thailand's government faces collapse. Bloomberg reports that Thailand's government is at risk after a leaked phone call sparked political turmoil with
Yeah,
the PM Shinawatra. I only know that name from cricket. Facing resignation calls and protests.
they've tied
And
himself
finally,
up
just
in knots with that, haven't they?
oh, hello. In equity names, obviously, we've already spoke about Microsoft. We've already spoke about Nippon. Morgan Stanley exits its equity options unit. Bloomberg says Morgan Stanley is closing its electronic market making unit for US equity options, retreating from a booming retail derivative market. And that, I've already done all the Iranian stuff. So for me, that's it. Back to you in the studio.
Good stuff. Thank you, Ryan. Being very efficient this morning, aren't we?
We are, we are. We were
Yeah,
yesterday as well, to be fair.
we were.
I'm as shocked as anyone.
This is very unusual. It can't last, surely.
No, no, no. It's all gonna go tits up at some point.
Yeah, absolutely. In terms of today, then, of course, before getting to scheduled events, just a couple of things worth noting. Firstly, of course, focus will remain on geopolitical developments in the Middle East, and that will, certainly involve a hell of a lot of headline watching, mainly using PIQ suite, of course.
Yes.
The second thing to bear in mind is that, of course, US markets are by and large closed today for the
Oh, of course, yeah.
Juneteenth holiday, which I'd totally forgotten about when I woke up this morning and went, why the hell are my treasuries not giving me any pricing on Bloomberg? It took me a minute to realise that there was a federal holiday. Of course, the other thing to bear in mind is that given it is a Thursday, a lot of people will probably be using that as an excuse to take a long weekend. So conditions
Synthetic
could be,
Friday.
indeed, so conditions could be a little bit thinner than usual, but a little bit like my hair tomorrow
Yes.
as well. In terms of today, though, and for scheduled events, in about 10 minutes' time at the top of the hour, we have a policy decision due from Norway. The Norges Bank expected to hold rates steady at 4.5%, though they will likely continue to guide towards delivering a rate cut this year, though that cut is probably not going to be delivered until the autumn. They do keep pushing back the timing of that rate cut, actually, so that is perhaps something to keep an eye on. And then the policy bonanza wraps up at lunchtime with the old lady of Threadneedle Street, the Bank of England's Monetary Policy Committee at midday expected to hold bank rate steady at 4.25%. That is likely to come via a 7-2 vote split, with external members Dingra and Taylor likely to dissent in favour of at least a 25 basis point rate reduction. It is possible that that is a 6-3 vote. The top contender to join that dovish dissent would probably be Deputy Governor Dave Ramsden, although, of course, Catherine Mann could do absolutely anything, given the way that she's been voting recently. It really would not surprise me if she voted for something stupid like a 100 basis point cut.
Do you know what? I'm going for 6-3. I think there's far more of a chance of 6-3 than 7-2.
Well, go on. Ryan's going against consensus with that one, but we will revisit in the morning. In terms, other than that vote split, there's likely to be little of interest from the BOE this lunchtime, to be completely honest. The policy statement is likely to be a reiteration of the now familiar guidance around a gradual and careful approach to future policy easing, while also repeating that policy needs to remain restrictive for sufficiently long in order to bear down the risks of potentially persistent price pressures, with the MPC also set to remain firmly in a data-dependent and meeting-by-meeting stance. Do note, of course, that there are no new forecasts due from the bank today. There's also no MPC press conference, although there is the chance that Governor Bailey does pop up in a few media interviews at some point during the afternoon. Money markets, incidentally, pricing about 50 basis points of cuts from the BOE, not fully discounting the next cut until September. As for other bits and bobs, of course, geopolitics and trade headlines potentially may impact. 4 ECB speakers due throughout the day, including President Lagarde, who I think is making remarks as we speak, but hopefully we're of much more interest than her. And of course, again, just a reminder that the US is out, so US markets closed, volumes light and liquidity relatively thin. But that's pretty much it from me this morning.
Wonderful. Well, thank you very much, Mr. Michael Brown. Listeners, thank you so much, as always, for tuning in. If you are trading today, keep it tight. Whatever you're doing, stay safe. Have a great day. Get down the pub maybe as the US markets are closed. Drink with moderation. Moderation. Absolutely. And we'll see you all tomorrow. Much love.
Bye for now.
Bye for now.